Good morning, traders. It is Friday, 1st of July. We're moving into the second part of the year. This is James Thorpe stepping in for Steve Miley at the Trade Day Daily Bull versus Bear webinar. It's good to be back. Can't believe I actually made it at 6:30 a.m. It's very unlike me to get started right on time. Not for wanting to. It seems I always experience technical issues as as I seem to start these webinars, but not this morning. Thankfully, we're on time. So, as I said, it's good to be back. We are heading into the Independence Day weekend, and I'm really looking forward to this long weekend. I know, I know. I shouldn't be celebrating the fact that this is a celebration of the Americans kicking out the Brits and gaining their independence. Nevertheless, who doesn't love a long weekend, particularly one in the summer where you get to spend it with your family, barbecue, and enjoy the great weather here in the Midwest? Um, I'll come on to the trading hours in a minute, but I just want to sort of kick off with a huge thank you to everybody because it has been an extraordinary month in Trade Day's very short history. And that's largely down to a video that we did with Rod Casilli, the Futures Fanatic, on YouTube. He did a founders interview and it was very well received. It led to a huge surge in sign-ups to our program, both free trial and people paying to be evaluated, and just really some wonderful, encouraging, validating feedback from those members that found us through that channel, saying things like, I wish I'd found you before. You're definitely doing things better than other ones. I mean, honestly, actually quite moving to open up some of those emails and read that. And Steve and I, have been absolutely thrilled by the way that the video has been received. And it's, it meant an awful lot to us and the team that are supporting us and Terra as well. And, it was just like really validating for all the hard work that we've been putting in. Our overriding core principles are trying to bring honesty, integrity, and experience to the prop trading sim to funded industry online. And it's been hard to get that message out, if I'm honest, in the first sort of 6 months of the year. It's very hard to sort of articulate who we are in a paid advert on Facebook or Instagram, Twitter, Google, wherever it might be. And having the ability to sort of really sit down and explain what we're trying to do at Trade Day through Rod's video. Obviously, it was a great format to do that, but finally, I think people are starting to sort of hear about us, starting to talk about us. Really starting to sort of spread the word of what we're doing here at Trade Day. And we've got more stuff to come as well. We've got some more. We're going to be doing more of those videos, but more importantly, we're going to be doing some more enhancements to the Trade Day platform, thanks to some of the feedback we've received in the last month. But I'll maybe come on to that at the end. But for now, I just want to say, a huge thank you for everybody that took the time to reach out to us to say how much they enjoyed the video and to show their support by not only joining our platform but telling their friends and fellow traders who are elsewhere, sitting in their Discord groups or forum chat threads, whatever it might be, about Trade Day. So thank you very much. And that kind of like leads me into this long weekend because we're absolutely exhausted. I mean, I've been doing like 16 hours a day since that video has been released. And, we're looking forward to, very much looking forward to spending some time with our families and somewhat relaxing this weekend. So, on that note, response times might be a little reduced between now and Tuesday next week. We are available, of course. We are here to support you. But as we move into the weekend, particularly Saturday, Sunday, and Monday, we're all trying to sort of have a little bit of a break And so we'll be monitoring everything, watching everything, responding to you. But just please forgive us if we're not our usual immediately responsive selves. We're just trying to have a little bit of a break here, much needed. Starting off with the weekend, and what that means for trading is that the cash markets on federal holidays are closed. So they're the underlying markets that the futures markets are based off. And what that tends to mean is tend to find a reduction in liquidity and a reduction in volume traded if the futures markets are open while the cash markets are closed. And the main reason for that is a lot of futures markets, or the liquidity in futures markets, is created by market making firms, usually off like a reference, right? And that reference is the underlying product that the future is based on. So if the cash equity markets are closed, very hard for a market making firm to make tight liquid markets in equity futures indexes like S&Ps, the mini S&Ps and the Nasdaq. So you tend to see a reduced amount of liquidity, and this tends to lead to a reduced amount of volume trading and quiet markets. Now, I'm just going to sort of backtrack on that a little bit. What that can also mean is if the markets do move, they move really hard and fast, or they can move really hard and fast because of that lack of liquidity and because of that. And so like if someone is executing a larger order within the market or some breaking news, the liquidity is not there to absorb it, and that can cause, if the market does move, sort of quick, sort of violent moves. So we always recommend don't trade on federal holidays. That goes for anywhere in the world, but obviously we're focusing on US futures products. Okay, so on Monday, we can see here I'm on the CME Group holiday calendar page. It's easy to find. Just go type in Google CME Group holiday schedule, and the first result takes you to this page. And you can see these are the important closing days, US holidays this year, where the markets are likely to be closed or trading hours will be affected. You have a full Excel sheet here that lists all the products. We have a compact Excel sheet here that lists it by asset class. So I'm just going to open up this one today. But if you're trading a spread of products, I do suggest you open up the full Excel sheet just to see, if you're trading metals, versus commodities and energies and things like that. And you might want to just check your specific products opening and closing times over this holiday period. So I'm going to open up the compact Excel. I've done it already, and it's here. I actually put it into a PDF form so I could have it in this window for this webinar, and it's sliced into three. So apologies that it looks cut off, but essentially here you can see here we're going to focus on equity and energy and metals, because right now on the platform, majority of people are trading E-mini and its micro equivalent, the Nasdaq and its micro equivalent, and crude oil and its micro equivalent, and its mini equivalent and micro equivalent. And there are a couple of gold trades. I see a couple of treasury trades. So if you're trading something outside these, please check for yourselves. But we can see here Friday the 1st of July, it's a regular close. So 4 p.m. Chicago time, or Central Time. This is 9 p.m. UTC, 2100 UTC. That's when the market closes typically on a Friday. So no change there. And then if we move forward to Sunday, you can see a regular open on Sunday. So we're going to open at 5 p.m. on Sunday CT for these equity products and energies. In fact, all the markets, it's a regular opening time. Then, look here, as we move into Monday, July the 4th, trading halts at 12 o'clock CT. So this is 12 p.m. CT, 5 o'clock UTC. This is an early close. This top line here is the equities. This bottom line here is metals and energies. I think it's metals and energies. energies and metals, right, close at 1:30 on Monday. So 12 o'clock close for equities, metals and energies close at 1:30 on Monday. So it is open while the cash markets are closed, but there is an early close. And the reason why I'm focusing on this is because if you are trading and you carry an open position into this close, you will fail the evaluation challenge. You will not be able to get out of it before we run the end of day trade report at around 4:30 p.m. Chicago time. The market will be closed. If you're trading a live account and run a position into this, it creates all sorts of risk management nightmares, both for you and for us, right? That 12 till sort of 5 p.m. is 5 hours when we won't be able to risk manage that position. We could have any sort of breaking news, anything can happen in Ukraine, any central banker could speak that could cause the market to open significantly away from where it closed, running any stops that you may have left in the market and causing uncontrollable losses. So people carrying positions into closes in the live accounts, we see that as a major breach of our rules, and we'll immediately revoke those live trading permissions. So I sent this calendar and a note about the early trading hours on email to every trader that we have, funded and non-funded. I posted it in the activity feed. I've posted it in the forums, and we made a note of it in the heads up. And I'm doing it on the Friday morning meeting. No excuses, traders. Please do not carry positions into the close. Monday is a half day, and remember, the markets are likely to be pretty rubbish to trade. Going into the evening, we see a regular open Monday night. So regular trading resumes at 5 p.m. Monday night and into Tuesday. So that's the holiday schedule for the Independence Day coming up. As I said, we don't recommend trading these markets. They can be very difficult to trade. I've been tempted to do it in the past, grab a few dollars or a few quid before um, before I take off for the day, only to find myself in positions I can't get out of, or losing a little bit of money on a move, and then the market dying. It's sort of like mugging you, stealing your money, and then running away from you, and you're just left sort of holding a loss, regretting the fact that you could have spent some time with your family and relaxed. So that's it. No webinar on Monday because of the holiday weekend. Steve's having a break too. I know that the UK are not celebrating being kicked out of the United States, the American US Independence Day, but because the markets are quiet and Steve, works incredibly hard to keep his research going throughout the year, every single day, and obviously does these webinars for us every day. We're giving him a break. So no webinar on Monday. The daily morning meeting, or the daily Bull and Bear webinar, as we call it, will resume. Normal service will resume on Tuesday. So, anything else on this? One thing that I might be doing over the weekend is we might be doing some software releases. We're certainly going to be doing some testing and software releases, so it's not all play this weekend for me. But I'm working with my development team to do some software releases, and they're kind of quite major. So what we might actually be doing is closing access to the site. Now, if you're a member of Trade Day, you shouldn't receive any interruption to the service. So if you wanted to come up the weekends and look at some of our content, catch up on some of our courses, read some of our research, you can do that. But if you've got friends or people that you think might be signing up for an evaluation or for a free trial this weekend, they might find it difficult when we're testing. Now, I don't know exactly when we're going to be doing that, but when we do, I'm likely to shut down access to purchase an evaluation for a few hours while we do the software release and the testing, make sure everything's okay, and then reopen up the site. But none of you, or everybody attending this meeting today and listening to it to Friday, you guys won't be interrupted. So that's all good. Right, let's get into it. We are looking at the day ahead, but before we do, just a sort of a recap on where we are. So it is July the 1st, the start of the second part of the year, H2 or Q3. And, what we're looking at apparently is stocks have seen their worst half year since 1970. And during the week, Fed Chair Powell and his European counterparts said the risks are mounting that the world is shifting to a regime of higher inflation. And Lagarde says, I don't think we're ever going to go back to low inflation environment. Christine Lagarde, the chairperson of the ECB, the European Central Bank. So, no shit, Sherlock. Thanks for telling us that. You banged on about it being transitory for so long when we all sort of sat here in these morning meetings going, no, it's not transitory. Now you banged on about, well, we're just going to have to be more aggressive on rates, but it should come off soon. And now that's subsiding. Then you were talking about like, oh, it's going to be a soft landing, but now we're, the assessment or the sentiment in a lot of economists and think tanks is that actually there's no soft landing. We're heading for a recession. Now, here's a story for you. Last week, my wife and I were going out. We were leaving our children at home. They're 10 and 12. What do you want for dinner, kids? Well, mummy and daddy go out. We'll order DoorDash for you. A unanimous chicken sandwich was the vote from not Popeyes. That's usually the one that they go for. A Chick-fil-A. Chick-fil-A, they wanted Chick-fil-A sandwiches. So there's two of them. So two Chick-fil-A sandwiches, two large fries, and two milkshakes. And one pack of 12 nuggets. $58. $58. Now, that includes the DoorDash. I didn't realize DoorDash whacked 20% on the price of the order. And I actually added a $7 tip on top of that. And obviously, we're in Illinois, so sales tax is high. $58 for two chicken sandwiches from a fast food restaurant. Come on. Tara and I, our family's switching our spending habits. We're ordering less sort of food and eating out less, or ordering less takeaway food and eating out less. We're noticing the bite at the store when we go and do the weekly grocery shop. Everything's getting expensive and we're feeling it. The point is this: we're starting to change. We know that, but we as a family are starting to change our spending habits. And if we're starting to change our spending habits, everybody else is, right? Rarely do your behaviors as a consumer exist in a vacuum unless there's something going on that's specific to your own financial circumstances. But if you're thinking something, it's likely that the world's thinking the same thing. And I think we're going to start to see now retail sales numbers. It's all this sort of shifting consumer spending. We've already started to see it, but I think we're going to see it quite dramatically appear as we move into July's numbers, like shifting retail spending and consumer spending. And sentiment numbers are going to be hit quite hard in July, and I think that's going to put pressure on further pressure on markets. So, that's kind of like the background we're in. I think as I look to today's daily economic data release calendar, there's not a great deal. Interestingly, there's not a great deal to come, but this morning we can see the European CPI data coming in hot, 8.6% versus a forecast of 8.4%. Manufacturing PMI we had in Britain was lower than expected, but slightly better, like 0.1 better in the Eurozone. So not good data coming out of Europe, and probably setting the tone for a softer day in equities in the US, given that there's not really that much data other than the ISM manufacturing PMI. ISM, Institute of Supply Management Manufacturing Purchasing Managers Index, to give it its full name. So essentially, what this is a survey of around 400 companies, and the executives within those companies that are tasked with making the key decisions around imports, exports, backlog of orders, production, supply deliveries, inventories. And they take all this data and then they seasonally adjust it. Because things can change throughout the year. You're running into Christmas, for example, you might see a surge in consumer. If you're interviewing a consumer-based product company, a surge in orders. So everything's seasonally adjusted, and then we end up with a number. And anything above 50 is positive. Anything below 50 means it's in contraction. The expectation for ISM is 54.9. Um, you know, unless it comes in significantly away from that number, either as an improvement or as a decline, I don't think it's going to have that much impact on the market. It really is the key data released today, this afternoon, but you can see it's a relatively light afternoon. Um, Manufacturing PMI, ISM, manufacturing employment, ISM manufacturing PMI for June, US Baker Hughes oil rig count, and some CFTC numbers. All right, so there's not much out this afternoon. We have this ISM number. We'll be watching it. I don't think it's really going to impact markets. I think what's going to drive price today, we'll have a look at some headlines. There isn't much in the headlines. What's going to drive price today is the fact that we're going into this long weekend. Technicals, the long weekend, position squaring ahead of the long weekend. Nobody wants to have a position that they're not really going to trade or be able to risk manage until Tuesday next week. That's a long time in today's political environment. So I think there's going to be some position squaring ahead of the weekend. I think there's going to be some what we call early exit of trading staff. So, it'd be when I was working in trading companies, a day like today, typically we'll see how the markets are. If they're quiet, sod this, I'm going home. Close up the trading book, close out my positions. I'm going home. I'm going to have a long weekend. And so I think we're going to see trading get quiet as the day goes on. Who knows? But I'm saying this, barring any breaking headlines, I think the market's going to be relatively quiet, maybe a little choppy as people position square ahead of the weekend. But I can't see the market sort of driving in any one direction. We'll take a look at the charts in a moment. Right now, I want to move over to the headlines. As I said, this is the market's headline, right, from Reuters. BT and Amazon share UK rights to European soccer. And that's kind of like highlighting sort of any sort of lack of any real news stories that's going to drive price either way. So as I said, it's going to be a pretty quiet day on the sort of, certainly from a fundamental analysis point of view. I pulled out a couple of numbers here. UK consumer cautious about their borrowing as inflation mounts. This is just a story, again, reiterating how the consumer behavior is shifting now as the inflation issue, continues to sort of be a pain in the ass, continues to be, create pressure in the system. British consumers increased their borrowing by less than expected in May in a sign of caution amongst households as inflation accelerates. Lending to consumers rose by £844 million, to just over $1 billion in net terms, a lot less than the £1.3 billion increase, which what would that be, about just over $1.5 billion increase, which was the median forecast in a Reuters poll of economists, and down from £1.377 billion rise in April. With interest rates rising and the squeeze on households, real wages from higher inflation set to intensify further, we expect borrowing will be weak over the rest of the year. Probably pay that guy £300,000 a year to sort of say that type of thing. Sorry. Okay, moving on to the Forex headlines. Gold's under pressure this morning. I actually didn't read this headline. Let's just open up. We can take a look at it. We have some weakness in the British pound. I think that's actually dollar getting a small bid across the board because we can see weakness in some of the other, like the Aussie and the New Zealand currencies. There's the CPI running hot. We just covered that. Let's have a look what's going on here. Gold tumbles below 1800. Yeah, so I was looking at this. I'm not really a gold trader. I find it a very difficult market to trade, but I was looking at it from a chart perspective, and it does look weak, and from a technical perspective. And I think if I was to trade gold, that's how I would focus my decision making process in gold. It would be around the technicals. Personally, I'm more of a fundamental trader than a technical trader, which is why I like trading equities and sometimes bonds, is because I like to have a feel, or think I have a feel, for what's going on from a fundamental point of view, driving price, and I don't really have that in gold. But let's have a look here. A drop in the middle of May was thwarted as buyers held their ground at around 1800. But now, with the dollar going from strength to strength, even gold is finding it tough to stay afloat, as commodities in general, industrial metals especially, are struggling over the past few weeks. It looks like precious metals are being hit hard this week, with silver down 3% today, below $20 at its lowest since July 2020. Meanwhile, platinum has fallen. Okay, so what we're seeing here then, it sounds like, is a sell-off generally in metals and in precious metals. This article is citing potentially strength in the dollar. Um, again, I'm not really a gold trader, so I don't know how this whole web of fundamental drivers fits together. But that's what they're citing there. In the Eurozone, June's preliminary CPI, we touched on this. There's nothing except some commentary on the headline. It doesn't say why it's running hot. And then not so good news for me, having grown up and spent most of my adult life until 2010 in the United Kingdom and accumulated some assets there. We have a house in London and some pensions, and and now I'm in the United States. So if I want to bring those over here, it's getting more expensive as the pound gets weaker. So you'd be hard pressed to find a day where the pound isn't acting somewhat like a commodity currency these days. On a day where the Aussie and the Kiwi are slumping, the pound is also struggling. It's down 0.9% to 1.2064. Now sellers resume the downside momentum and go in search of a push towards 1.2 again. Deep joy. Let's move over to the charts. It's 6:57. When I came in this morning, I was like, it's going to be a really quick meeting because there isn't much out on the news front. And here we are, almost half an hour in. I've got to learn to stop talking so much. Let's have a look at the charts. So we're in the E-mini S&P here, futures, and this is the daily, this is the hourly. I was reading Steve's research this morning. He's still kind of like bullish, from a technical point of view, has a bullish feel. I look at this, I'm like, no, son, that's definitely a downtrend in a daily chart. But when I look over at the hourly, it is hard to sort of say where's it going to go from here, because this seems to be quite a fairly major level of support where we are, and we bounced off and rallied, come back and somewhat tested again and rallied from here. And I think, don't hold me to this, but I think, given the fact that there's no real news out to drive price, and we're heading into this long weekend, and as I said, a lot of traders will be squaring books and trying to look for an early exit so they can go and enjoy the long weekend. I don't think there's enough pressure in the market to break this level of support. And I think what we're in for today is a range bound day between this level of support and this sort of resistance, up here, 38. What is this? Let's put the crosshair on. You can get the price, right? Oh, yeah, crosshair. Show crosshair, please. There we go. Oh, no, not the crosshair, the data box. What am I talking about? So that height 38.22 and 3/4 or 38.22.75. I think we're going to struggle to get above that today, and I think we're going to struggle to get below this sort of 37.40, 37, let's call it 37.30, 37 to 37.40 level of support. I think we're looking for a fairly sort of range bound. This is the daily. I doubt it's going to go below this day here, and it certainly will struggle to get back up above this level here, 38.50. So that's a sort of a wider level of support and resistance. I don't think it's going to. It certainly won't get above here. Certainly won't get below here. But zooming in on an hourly chart, I think we're looking for a chop fest today. Maybe a slowing down as well. So I'm not trading it today, traders. I've got work to do with trade day, but even if I didn't, I wouldn't be trading it. As I said, I don't like it when there's no real news driving price, and you're heading into these situations where there are long weekends ahead of you. This is the Nasdaq. Again, the daily looks very bearish to me. This is the hourly. Bounced nicely off this small uptrend and bounced again. So I think we might hold this sort of uptrend, certainly struggle to get through these lows in the Nasdaq and this high here. Treasuries, nice and strong in the treasuries. Look at this; it rallied today, and it's broken these sort of levels of resistance. You certainly don't want to be short treasuries at the moment, right? That was the downward trend. It's broken it convincingly. 2 strong bullish days, meeting this resistance here. It might fail at this resistance, come back to this trend line, and then before it marches up. But you don't want to be short treasuries at the moment. Oil, seeing a bit of a bounce off this trend here. Although it's got this very nice technical trend trending up. It has been coming off. So I think what we're looking at here, again, without any real fundamental breaking news stories that suggest oil is mispriced and should be priced trading somewhere else, I think the next few trading sessions, next few days, we're going to consolidate between this downward trend here and this upward trend here. Looks like it's put the low in for the day, doesn't it? If it does break these lows, it's going to head down to here. 10, whatever that is. Where's the data box? 101, $101, 50 odd cents, 53 cents, I think that is. I can't see it getting down there. Not today. It's like it's trading, 108.81 now. So I think the low's in for the day, and maybe pushes up towards 110.50. I think it's going to consolidate the next few trading sessions within here, and until we get some significant news, it's going to be difficult to break this downtrend. So that's really it. I'll pull up gold quickly. We can see gold trading is slumping at the moment. It's definitely in a downtrend. We can see it here. It's kind of sitting on this level of support. You could argue that it's broken, but if the rest of the day closes above this support, then you would say that the support held. But at the moment, if it's gonna continue off, I think you're looking down towards where's the data box. This kind of line, this line here, which I don't know what this is. To be honest, what's this low here? Let's have a look. Oh, let's have a look where that's come from. This low here. So this is $1,800, $17.95. Oh no, that's the low we're looking at. This one here. This low. There we go. That's better. So 1790. What's going on here? Let me pull this. Let's do this, and we can have a proper look at it. Told you I don't like gold. Right, here we are. This I want to know where that where that is. Come on, here we go. Right, why is it back? It's back here, and that says a low 1790. I must be misreading it. It looks like it's just above 1760 a troy ounce. So at the moment it's trading 1787. If it continues to sell off, I think it's going to probably head towards the 1760 area. I don't trade gold. I'm always in awe of people who do, and I see people who do, and people make money in it. But that's it. I'm not trading today, traders. It's hard to really see any sort of direction, any conviction. We have the weekend where, this long weekend where you'll see position squaring. So if people are short, um, from sort of these sort of levels, they might be looking to cover them ahead of the weekend. If people have bought this bounce and they're long, they might be looking to cover those, so a bit short covering, a bit of long covering. So I think a bit of a chop fest maybe going in, holding within this range, certainly holding within this range. And, I just wouldn't do it. In fact, what I'm going to do is I'm going to leave it there and end with this thought for the day. Because, I like to leave with a thought for the day. You shouldn't fall victim to this need or this kind of emotional desire to have to trade every day as a day trader, right? You feel like as a day trader, I should make money every day, or I should try to make money every day. And if you're on the evaluation challenge and your trading's being evaluated, and one of our objectives is trade for a minimum of 15 days, we don't really help that in that sense, right? Because you're thinking, well, I just want to bank another day on the challenge and get one step closer to completing that objective. Well, I don't think that's the wise decision here, because what you're doing is you're entering into an uncertain market, or you're entering in with an uncertainty in terms of, you know, it's going to be difficult to trade. And okay, you might book another day closer, but you actually might end up losing money. Remember that, because of the difficulty to trade on a day like today. So don't fall victim to feeling like you have to trade every day. If you don't really have an opinion today, enjoy the long weekend, and don't come in Monday and try and trade those cash market close, futures market open, reduced hour trading sessions. They're awful sessions to trade. And what will happen is this: if you've traded one, if this is your first one and you trade it and you make a bit of money, you're like, oh, that's great. I actually like these sessions. And then when the next one happens, you'll make a little bit of money and you'll be like, oh, great. And then like Christmas will come or whatever the next one is, and you'll trade that and you'll just get caught and you'll lose a lot. And trust me, over 15 years of trading, I plotted my performance on these cash market close, futures market open days, and net, it just wasn't worth it. And I looked back and I thought, I could have enjoyed all those days off and not got wound up being caught in positions on bank holidays. So don't trade them. Don't come in. Don't fall victim to this emotional need or this feeling like, as a day trader, you have to trade every day. If you don't have an opinion today, don't trade. Come back Tuesday and enjoy the long weekend with your family. That's it. I'm going to wrap it up there, traders. Thank you very much once again. Oh, one last thing. I did mention it right at the top of the meeting. We have some exciting changes coming to trade day. There's nothing really that you guys don't already know. There is one big thing you don't know, but that's yet to be finalized. But, thanks to some of the feedback we had in the last month, in development right now is nano micro mini equivalency. So if you're on the beginner evaluation challenge, you can trade up to 2 contracts to start, or up to whether that's micro or mini. By the end of July, we hope to have the technology in place to allow you to trade up to 20 micros or 2 minis. So we're working on that. That development starts on Tuesday next week, that project. And Ninja is coming to trade day. But we are very much at the whim of Ninja/Tradeovate at the moment because they haven't completed the development work and it's not in production yet. We're down as beta testers, so when we beta test it, I will let you know in the site how it's going and if it looks like the release is coming soon. They tell me in the next couple of weeks it's imminent, so we hope to at some point in July offer Ninja as well. So those are kind of like the two main things. You obviously know about the free resets again that come from some feedback we had from some traders. So if you're in a situation where you failed the evaluation challenge, you can buy a reset to start again, or you can wait until your membership at trade day renews. If at that point you are not being evaluated and you would like to start the evaluation again, email us and we will do a free reset for you. This is not like a bank where if you are being evaluated, we put a free reset in your account so you can use it at a later time. This is only for qualified accounts, and the qualified account is that you're not currently being evaluated. But you know about that. I sent emails on that before. So those are the developments at Trade Day. I'm wrapping it up. Have a great July the 4th weekend, everybody. Take it easy in the markets. Be careful out there. Be safe and have a great trading day.